The market loves a story. And in 2025, one of Wall Street's strangest tales isn't about AI software, crypto, or electric cars. It's about a nuclear power startup, a company with no revenue, no operating reactors, and multi-billion-dollar valuation. That company is Oklo Inc., ticker Oklo, a name that's suddenly everywhere from Reddit threads to financial news headlines. But behind the hype lies a much more complex reality about technology, regulation, timelines, and expectations. This is the story of Oklo's billion-dollar meme stock problem, and whether they can actually build a reactor in time to justify the price tag. Let's start with the basics. Oklo Inc. is a California-based nuclear technology company founded in 2013 by MIT graduates Jacob DeWitty and Carolyn Cochran. Its mission: build small modular reactors, next-generation nuclear plants that are compact, clean, and potentially cheaper to deploy than traditional large reactors. These reactors don't just produce power, they promise to be a cornerstone for future industries like AI data centers, defense installations, and remote industrial power. But in 2025, they haven't yet done what every utility or engineering company has to do first: deliver electricity to a customer. The company remains pre-revenue, with its first reactor not expected to be operational until late 2027 or early 2028 at the earliest. Now here's where the plot gets wild. Despite that lack of revenue and absence of operating reactors, Oklo's stock has skyrocketed, climbing hundreds of % in 2025 as investors grab shares like they were tickets to the future of energy. In some stretches, retail enthusiasm drove Oklo's market capitalization into the tens of billions of dollars, all on the hope of future nuclear power sales. That's a valuation most established energy companies would envy. But it's also one that has analysts, investors, and everyday traders scratching their heads. From Reddit boards to Wall Street commentary, the question echoes: is this rational valuation or just a meme-driven bubble? To understand that, you have to look at why the stock took off in the first place. It's not just nuclear power, it's the intersection of AI, clean energy, and explosive growth stories. As generative AI workloads like massive data centers expand, power demand explodes too. Investors started connecting dots. Future AI growth needs massive, reliable, carbon-free energy. Nuclear fits that build better than intermittent renewables. Oklo might be the company to supply that energy. Suddenly, Oklo was positioned as a key piece of the next industrial boom. And when you throw in the involvement of a household tech name, Sam Altman, the hype amplifies even more. You've heard the name Sam Altman, the CEO of OpenAI, the mega-hit AI company behind tools like ChatGPT. What many people don't fully grasp is that Altman wasn't just some distant investor. He was deeply involved in Oklo's journey to the public markets. In 2024, Oklo merged with Altman Acquisition Corp., a special-purpose acquisition company that Sam Altman co-founded and led, effectively taking Oklo public on the New York Stock Exchange and injecting it with over $300 million in funding. That was a pivotal moment that transformed Oklo from a private startup to a publicly traded entity with massive visibility. But in April 2025, Sam Altman stepped down as chairman of Oklo's board. That news alone sent Oklo's share price plunging more than 10% in after-hours trading. While Oklo was quick to reassure investors that Altman would still be a strategic partner and that the co-founders would continue to lead, the optics weren't great. When a charismatic figurehead associated with a hype stock exits the helm, the market often interprets it as a loss of faith. Traders started wondering, if Altman isn't steering the ship, does the company still have that same edge? Let's zoom in on that timeline. Oklo's internal plan, and what many investors latched onto, is to have its first small modular reactor deployed by late 2027 or early 2028. That's already a timeline that sounds distant when you remember how quickly AI companies can go from idea to revenue. But the nuclear world is far different from the tech world. Regulatory approvals, especially from the U.S. Nuclear Regulatory Commission, NRC, are notoriously slow, thorough, and unpredictable. Oklo's first nuclear license application was actually rejected in 2022 because the NRC didn't have enough information, a setback that shows how stringent the process can be. Even with recent efforts to resubmit applications and leverage Department of Energy programs aimed at fast-tracking advanced reactors, it's a race against the clock. Permitting a nuclear reactor isn't like launching a software update. It can take many years just to tick all the safety, engineering, environmental, and technical boxes regulators demand. So although Oklo officially hopes for late 2027 or early 2028 deployment, many analysts and industry veterans caution that getting fully operational and then selling power reliably may not happen until 2030 or later. That's a huge gap between today's stock price and realistic commercialization timelines. This mismatch between stock valuation and commercial reality is the heart of what critics call Oklo's meme stock problem. A company trading at sky-high multiples with zero revenue, no operating reactors, and years of regulatory hurdles ahead is exactly the kind of situation that can generate massive retail enthusiasm and equally massive disappointment if timelines slip. Some investors on public forums argue that Oklo's valuation reflects a future where dozens of reactors are deployed, selling power to lucrative sectors. Others argue it's akin to buying stock in an idea rather than a business. And let's be honest, ideas are inexpensive until they become reality. Remember, too, that Oklo isn't the only player in this space. The small modular reactor and advanced nuclear sector has seen a surge of interest. Companies like NuScale Power and other startups backed by major tech or energy giants are chasing similar goals. On top of that, traditional energy players and utilities with decades of experience are also pitching their own next-gen nuclear technologies. Competition, regulatory complexity, capital requirements, all of these are intense pressures for a young company trying to scale a product that literally splits atoms. But let's break down what Oklo actually brings to the table. Their design, called the Aurora Powerhouse, is a type of fast reactor intended to produce between 15 and 75 megawatts of electricity. These reactors are designed to be smaller, more modular, and ostensibly cheaper and faster to deploy than traditional plants. Oklo's vision is to build, own, operate these reactors and sell electricity directly through long-term power purchase agreements, rather than selling the reactors themselves. That's a business model many tech investors are familiar with: predictable, recurring revenue through contracts. But it only works if the reactors are built and operational. So can Oklo actually build a reactor? The honest answer is yes, but with big caveats. They have demonstrated technical progress, received site use permits from the Department of Energy, and are actively engaging regulators to push their applications forward. They've even broken ground on the site where early reactors would be installed. But the devil is in the details. And in nuclear power, the details take years to sort. As we've seen with other nuclear projects around the world, even slight engineering or regulatory hiccups can delay timelines by years. And when you're building facilities that involve radioactive materials, governments tend to be very cautious. Investors who bought into Oklo at elevated prices based on a 2027 deployment timeline are banking on a best-case scenario. Regulators cooperate, construction finishes on schedule, and early customers sign contracts that deliver real revenue. But if just one of those pieces slips, and many experts think that's likely, the stock could see dramatic repricing as reality catches up with expectations. This is where the meme stock vibe comes in. A lot of optimism priced in now, with success years away and uncertainty high. Here's a hard truth that every investor and viewer should wrestle with. Valuation isn't the same as viability. Stocks fly higher when narratives capture imaginations. We've seen that in tech, crypto, and even EV startups. Oklo's story, nuclear power meets AI demand, backed by a figure like Sam Altman, is compelling. But compelling stories don't automatically translate into cash flow. If Oklo doesn't generate meaningful revenue until 2030 or beyond, that means the current valuation is banking on profits that are 5 or more years away. And in the world of public markets, 5 years is an eternity. So what's the verdict? Oklo is neither a guaranteed revolution nor a guaranteed disaster. It exists somewhere between a visionary long-term play and a speculative meme stock that traders are buying because it sounds cool and futury. If you're thinking about this from an investor's perspective, the key is understanding how far away the real business fundamentals are and being honest with yourself about the risks. Now let me ask you, do you think stocks should price technology potential or should they price current fundamentals? Drop your thoughts in the comments because this is exactly the kind of debate that defines markets. This company could one day help power the AI revolution, or it could spend the next decade chasing regulatory approvals and capital raises. Both paths are possible, and both have massive implications for investors and the energy world. Oklo may actually build a reactor, but the stakes are high, the timeline is long, and the journey is anything but guaranteed. In markets, hope can drive prices as much as profits, but only profits pay dividends. If you're betting on Oklo, you're betting on the future of energy itself, and that's a story worth watching.